There you have it, the closing bell of the New York Stock Exchange. The Dow went down, around 280 points or so. The S&P 500 and the NASDAQ were also off. They both fell around 1%.
Let's bring in senior columnist at Yahoo Finance, Rick Newman. Rick, thanks for being here. What's driving the markets today?
Don't you love when everybody cheers, even though everything's going wrong?
Going south.
Which is basically what's happening there in that closing bell. It was a lousy week on Wall Street. We actually got off to a good start this week. We had that inflation report on Tuesday, which showed that inflation is improving, and it actually improved by a little bit more than economists had forecast. So stocks actually went up Monday and Tuesday. And then the Fed came along on Wednesday and kind of ruined everything. So the Fed did what everybody expected, which was raise interest rates by another 0.5 percentage point. They had telegraphed that. But what the market did not expect is a very hawkish tone from the Fed. So instead of the Fed saying, yeah, we are seeing some progress, we like the progress we're seeing, the Fed basically said, we're not at all satisfied with the progress we're seeing, and we may even need to raise rates more in 2023. Than we thought the last time we talked with you all about this. So the markets immediately tanked from the moment the Fed released its rate hike information on Wednesday. The S&P 500 was down over 5%, so down about 2.5% on the week, but 5% since the Fed came out with that news. So markets are just having a hard time digesting where this is going to land, how much damage the Fed is going to do as it tries to slow the economy, and whether we're going to have a recession or not in 2023.
So to pick up on your point, Rick, the Dow continues to see losses after the Fed increased interest rates this week. So what do you think the lasting impact of the rate hike will be on the markets in the weeks to come?
Well, you might think this is an easy question to answer, but it is a very impossible question to answer at this point, because there are, let's call it, three scenarios. So the soft landing scenario would be the Federal Reserve manages to slow the economy, which is the main way it tries to bring prices down, and it does not cause a recession. It just slows down things like wage growth and retail spending, so demand comes down a little bit, but we don't end up in a recession. Or we could end up in a mild recession, which would mean unemployment goes up. That would probably cure inflation, but you have to ask yourself, is it worth putting people out of work to get inflation down? And there are some people who are not sure about that. And the third scenario is that we have a more severe recession with a higher rate of unemployment, and the Fed ends up doing more harm than good. So this is a big ball of mess right now, and markets cannot figure it out. And one of the problems with what the Fed does is there's just such a lag between monetary tightening or raising interest rates and the actual effect it has. It could be 6 or 9 months before we really know.
Yeah, I've always wondered why you have to be doing really well in one sector in order to, and then bad in another. It just never made sense to me, but so is life in the economic bubble. CNBC, on to another subject. CNBC is apparently reporting that Goldman Sachs plans on laying off up to 8% of their employees. So, how might downsizing at the Wall Street Bank impact the markets moving forward?
I think those Goldman Sachs bankers are going to be okay. I'm not starting a GoFundMe page for them just yet. And we have heard isolated cases of companies announcing what sound like pretty big layoffs in the hundreds or maybe in the thousands. We've heard some of the tech firms say this is true. This is not yet showing up in the overall employment numbers, though. I mean, the unemployment rate is still very low. Economists keep saying, I follow this in great detail every month. Economists keep saying we expect the hiring market to slow. We expect employers to slow down their pace of hiring, and it keeps not happening. So it's almost inevitable that employers will have to slow down the pace of hiring at some point in 2023, especially as we've been talking about if the economy does slow. But I don't think people should worry if they hear what sound like big numbers of layoffs at this company or that. I think people have a pretty good sense of within their own community and their own employer, are things going okay, or are things starting to turn? And I think at many employers, even if business is slowing, they're very reluctant to get rid of workers because they've had such a hard time getting workers. So for now, this could change in a month or two. But for now, I think workers are still okay.
Thinking about all the training they poured into those workers
Right, that's
since
an investment.
COVID. Yeah, huge investment. and knowing that people have other options
That's
too.
right. That's right. All right. Well, Rick Newman, thanks so much for your insight and
guys.
analysis.
See
We
ya.
appreciate it. Thank you.